In 2010, Bitcoin began trading at around 5 cents per token. Most market participants ignored the emerging asset class in the early years, but many embraced blockchain technology that is revolutionary for finance. In June 2011, Bitcoin rose above $10 per token. In 2013, the price first eclipsed the $100 level and rose to over $1,000 per token. After a severe correction that took the price below $200 in 2015, it was back over $1,000 in 2017, the year that it exploded to nearly $20,000. After another period of price carnage that took Bitcoin to a low of under $3,400 in early 2019, Bitcoin rallied, made a higher low during the start of the global pandemic at just below $4,000, and exploded higher to over $68,900 in November 2020. On November 10, another ugly correction began. Bitcoin is a global currency with its price a function of the market's sentiment that leads to periods of more aggressive buying than selling and times when selling overwhelms buying. The recent events in Europe could lead Bitcoin higher as the cryptocurrency has no political allegiances. The November 10 bearish key reversal in Bitcoin and other cryptocurrencies led to over 2 months of selling, pushing prices to half the level than the mid-November high. As the chart highlights, Bitcoin's price dropped from $68,906.48 on November 10 to a low of $33,076.69 on January 24, a decline of 52%. Bitcoin has made lower highs since November 10 but higher lows since January 24. On February 24, it reached $34,366.52 and bounced higher. The pattern of higher lows is establishing a bottom for Bitcoin. Bitcoin is the most liquid crypto. At the $39.236.53 level on March 6, Bitcoin remained the leading cryptocurrency with around an $744 billion market cap, 42.2% of the entire asset class's value of $1.765 trillion. Bitcoin was the first cryptocurrency, and it remains the leader of the pack of over 18,000 other tokens. Ethereum, the second leading crypto, had a market cap of just above $317 billion, less than half of Bitcoin's value. Only 78 cryptocurrencies, or 99.5% of the asset class, had a market cap of over $1 billion. Bitcoin's market cap makes it the most liquid cryptocurrency. While the leader's price has been highly volatile, it has the critical mass for trading and investing. Bitcoin flies below the radar of governments and regulators. Bitcoin is the leader of an ideological financial revolution that began with its birth in around 2010. The world has embraced blockchain technology. A growing number of market participants supporting the asset class tolerate the volatility because the value is solely a function of buying and selling without government interference. Government power comes from the military and controlling the purse strings or the money supply. Fiat currency values can rise and fall with government interference. Central banks, treasuries, and government monetary authorities can expand or contract the money supply by injecting or withdrawing currency from the financial system. Bitcoin's supply can only be increased by mining activities. Moreover, the overall stock is fixed with a cap. Bitcoin's total supply is limited and predefined in the Bitcoin protocol at 21 million, with the mining reward decreasing over time. The chart illustrates that just under 19 million Bitcoin are circulating on the network as of the end of last week. The leading economic world powers have not accepted Bitcoin as a global currency. While they have been discussing and studying the cryptocurrency asset class, there are no defined and transparent rules and regulations as of March 6, 2022. Bitcoin is anonymous, and it is liquid flight capital. The current US and European sanctions on Russia and its oligarchs highlight the potential for Bitcoin and other cryptocurrencies for use as circumventing tools. Time will tell if Russian billionaires and even the government employed cryptocurrencies to get around sanctions. Meanwhile, millions of refugees are fleeing war-torn Ukraine, most with nothing but the shirts on their backs. The Ukrainian resistance led by its Churchillian leader Volodymyr Zelensky, who has led the people and expertly uses technology to get his message out to the world, reflects Ukraine's technological savvy. Some of those fleeing to Poland and other countries are likely carrying savings on flash drives or via secure password keys. Accessing their assets in cryptocurrencies from computer wallets can ease emigration problems for technologically savvy refugees. Moreover, the war in Ukraine is a template for other people in countries and territories that face hostile advances. Taiwan is home to over 23.5 million people. China makes no secret it intends to reunify with Taiwan, and many Taiwanese are likely considering holding cryptocurrencies in case a future Chinese attack causes them to flee their homeland. Russia and Ukraine will likely cause another leg up in Bitcoin. In the past, refugees stuffed gold, diamonds, and other high-value assets in their pockets and sewn them in their clothes when they ran from armies. Many left assets behind as they could only carry a limited amount because of weight considerations. Cryptocurrencies allow refugees to leave a dangerous country with all of their assets. The world changed on February 24, 2022, with the Russian invasion of Ukraine. Russia's President Vladimir Putin does not consider Ukraine a country but Western Russia. The US, Europe, and many other allied countries believe Ukraine is a sovereign country in Eastern Europe. As the war rages, it is a warning to Taiwan vis-a-vis China and other European and Asia countries that were part of the former Soviet Union. I expect cryptocurrency values to increase over the coming months and reach new highs. The war in Ukraine only strengthens the argument for currency instruments that transcend governments and regulators. Russian leader Vladimir Ilyich Lenin said that there are decades where nothing happens, and there are weeks where decades happen. The words of the brutal dictator ring prophetic after Russia invaded Ukraine as it has changed the geopolitical landscape, and people worldwide will adapt to the risks of the new dynamic.